So, good evening. Welcome to today's update. Today's date is the 11th of November, 2023. We are going to look at a couple of instruments and what would be the direction of trade and how to apply ourselves. The structure and wave, it's very important, and they are key to you making any meaningful impact and be successful in forex trading. Most of the time we are impatient, and like we know that in about 70% of cases, the trade usually are correcting. And so when you learn pattern of correction, you get involved in the mix of this 70% to trade and to make gains. Trade will not continue to do this forever. Trade will not do that. So this is a monthly time frame on US dollar index. We want to see the price action that we are seeing on the monthly. We are seeing this already, appearing, and this may have signaled the end. It's a doji, or more or less telling us that there's a loss of momentum to the upside for this to have appeared. And this month so far, we can see the push to the downside. But having said that, it may not be apparent on the monthly where the direction is set, but we know that we are gradually warming up for a fall in dollar. That is obvious. We are warming up for a fall in dollar, and these had appeared and price pushed to the downside. Now they have been able to force the price up. So we are warming up for a big move to the downside, and it's dollar losing. But can dollar still push and break the top? It's possible. Dollar can still push to the upside and break this top. But that is like there's a probability, but maybe a little probability that dollar would do that. But what is most probable happening is dollar losing strength and we continue to the downside. Now, I want to show us something here. Look at this place. When the bullish candle first closed in the month, so you would have thought that after this had closed in the month, that the next one is going to be bullish. But see what happened, that the following one was bearish, even breaking low. So, but what we give you the information that this is likely to happen will be the wave count in this area will kind of give you a clue as to what the price is going to do and how they are still going to take it, trust to the downside to take liquidity before, moving to the upside. Now, of course, we are not really that far out here, even though there's a less probability that that would happen here, but it could happen. But when we look into the structure, we will see what most likely is going to happen. Today is just like the 11th day of the month, and we've had this move so far, and within the next 2 weeks, of course, we can have a push to the upside and a recovery to the downside again. So anything can happen. So this is still forming. It is not that, okay, maybe they are closed. Of course, there is likelihood that they are closed, at this level. But when you remember this, anything is possible. Now, let's look at the weekly candle to see what has happened. So this is the weekly candle. Now, the weekly candle, what has happened here is what we are seeing so far, because that's like a 4 weeks is a month from 1, 2, 3, 4. pretty much here was the bullish candle with a small one. And so far, 1, 2, it's the new month here. Okay. Now, looking at this, the bears took it down and see how far deep to the upside that dollar has, gained itself. And of course, there is a little distance left for it to recover and probably break the top once more before the price is sent down. So it's looking on the US dollar index as if we are doing a wave 5, but we're going to see that. Let's look at the daily time frame. Now, so far, this is where we are. And the move here, we said, is wave 1, okay? And that this is A, B, C of B. This is wave A, B, C of B, and a C. And now, are we doing wave 5? Are we doing wave 5? Now, the clue will now be, because the last thing we are correcting will be this wave to the downside. This wave to the downside, how much of correction are we going to gain? And that will give us a clue as to what is going to happen. Now, we can see the appearance of a daily doji. And after this move, there seems to be a lot of momentum also to the upside. And daily doji is appearing here, which may signify that, okay, we want to have probably a pullback. And that pullback, are we going all the way to break the bottom, or we're just correcting to go up the more? So we must be looking at all these, possibility, when we open. So the doji is appearing, it has not closed. But let's look at the 4-hour time frame and what information we can gather from here. On the 4-hour time frame, again, on the 4-hour time frame, we saw this as what? As A, B, C of B, and that this is a C. And we said these may have just be a complete set of wave 4, and we have not broken the lower limit of 4, which is at 38, which is the daily at 38, and now we have this going up. This going up here, in terms of recovery of this last wave, if you take this price from here, price at dawn, almost about 76, and we are having correction here. That's big, and that is really huge. And right from this point here of X down to this point, what has price done? If we look at US dollar index from here and down to where we have a U-turn, yeah, that's over 61.8, which means that we may be correcting to the downside for a push up one more time. So US dollar index is kind of still telling us that we are likely still going to push up, probably kiss the top or grab the liquidity above this area before going down. That is what we can see on US dollar index. There's a little strength here, though it's going. So, and again, when we look at what is building here, it's also funny. It's only when we look at the recovery and the retracement, the way it has gone, because at the end of the day, it could be a wave 2 to this move and the price is coming down. It could be a wave 2 to this move and the price is coming down. So it's 50-50. It's 50-50 because we have a doji building up here. And with this doji, what will follow is a retracement. So if we move to the downside, we want to see how we are going to move. And if we go sharply to the upside again, that means we might likely be breaking the top. But from what I can see here, I can't see anything yet to tell us that probably we are correcting a wave 1 and a wave 2. So it now depends on this wave that is building, how deep it's going to come down. If it's coming down and it's not going to break the bottom, and we're going to have another move, a wave again to the upside. So everything is in between now. So we have to be very careful. And when you are taking trades here to sell, you must guide your trade with stop loss, tight stop loss. And again, if we get a price reaction to buy, also we must guide with stop loss. But we have to be looking at what exactly is happening here. So this thing is not really helping us much. It's not helping us much because for all that we know, this may just have been a wave 4. And the recovery here might just be like, sorry, this may have just been a wave 4 here, a 3-4, and this, the third wave, because it's corrective and it's not really, it's an ABC of correction, it's not really a motive wave. So usually when you are seeing an ABC of correction, let me show you what I'm trying to say. Let me go back to the daily. What I'm trying to say is this. In an ABC of correction, when you have an A, B, C of B, and you're going to have a and the entire B and C, the C does not really run like, oh, a motive wave. It doesn't. It doesn't have to. It doesn't have to. So when you have these, the point at which you have 4 here and the 3 here could have just ended the whole thing, because this may just be like, okay, 3 of 3 and a 4 and a 5, and that's the end of it. And so this may just be the first wave, wave 1, and here is just the correction of wave 2, and probably we are inside of wave 3, trying to do a 3-2. So it all depends on how this thing is going to break. So let me go back to the 4-hour time frame. Now, going back to the 4-hour time frame, I want you to get me clearly that this may have just been the end of a run here of C. So this may just be the first wave. Though it looks so corrective, may just be the first wave, and probably this may be a wave 2. Because at the end of the day, if you look at the retracement, does it look like wave 2 from here, the top here, down to this point? Let's have a look at it. Okay, the retracement does not look like a wave 2. That's almost like 90. So it might still be corrective. So that is what the US dollar index is giving us. But in terms of this move, you know, this is not a 2. It doesn't have anything to look like a 2 here. It's just a correction here and a move to the upside. It's different. What we are getting on the US dollar index is different from the DXY. And so we have to try to navigate and make sense of what the US dollar index is telling us and the DXY is telling us. But this recovery is also huge. And the reaction so far, you know, it's beyond, it's almost at 76 of this move to the downside here. Now let's look at the 1 hour. Now looking at the 1 hour, of course, what we were expecting is that, okay, we were expecting some corrections, but the way it has gone up, yeah, we may see this as a move, anyhow you call it, but this is an ABC move, really. This is an ABC move. This thing is giving us an ABC move, where this is on an A and the B in between here, and that this may have not finished itself. That is what I'm getting here, because this is like a B wave. And for it to be a B wave means that this one is not completed yet. We might be having the C wave divided into 3. So at least we should be expecting an 100 extension of this to the upside. What am I trying to say? In terms of this extension, as the height here and the low here of the A and the B in the middle, the 100 is here, and the 123 is here, very close to where we're going. So for now, we are seeing a move to the downside, and if it's impulsive, then that tells us that we might be going to break here, because we shouldn't break this point now. If we are going to still go up again to go up, we shouldn't come and break this point. And that is will be a decider. So that is what we can get here. Now let's go to the DXY and see what we can make out of DXY. On the monthly, it's still the same in terms of the price action that we saw on the US dollar index. It's still the same, which may just be an early days of us turning down again and dollar losing strength. And let me jump to the 4-hour time frame and see how it's different. Now, when you are talking of the recovery of this entire run, is more shrunken here, is retarded. But on the US dollar index, it's a big stuff here. So, and the DXY is kind of telling us that the dollar is too weak. And the US dollar index, looks like it's rather exaggerated. So you can see what I'm trying to say. The move here looks like it's retarded. The recovery to the upside is retarded on the DXY, whereas on the US dollar index, it is exaggerated. So you can see the exaggeration, the recovery is a whole lot here, on the US dollar index. So we are going to also look at all of that. And when you are seeing things like this, it's more 50-50. Things are more or less in the middle. So you need to trade cautiously because it can be anything at the end of the day. So it can be that this is a wave 1 and a wave 2. And when we come with wave 2 and we go down, if you have an impulse to the upside, then we can say that, oh, we are doing a wave 3. But if the impulse to the downside, then you now know that, okay, this is a wave 1 and a wave 2 and a wave 3 to the downside. Let me come again. This has been an impulse to the downside here. So we are correcting this wave. The extent of correction of this wave to the upside and the next impulse might just give us a clue. It has to be a very big impulse like what we saw here, might give us a clue to which direction the trade is going. But from what we can see here, if this turn to correct probably to an extent here and send another impulse to the downside, then we can take that as a 1, a 2, and a third wave to the downside, which means that we are likely going to break the top again. So we are at the point of that making decision of what is going to happen. So if we have an impulse, if this one corrects to the downside and throw an impulse upwards, so that means that it's a wave 3 and that we are going to break the top. But in case this comes here and is an impulse to the downside, then this is a wave 1, a wave 2, and a wave 3 to break the bottom. That is how to project. But let's look at what is cooking here. Let's look at what is cooking there. Now, on the US dollar index, we saw a daily doji. What do we have here? Yeah, it doesn't look like a doji here. Contrary to what we saw on the US dollar index, it just looked like, okay, the price action that, okay, the momentum is lost and the sellers are trying to probably move the price to the downside again or correct at least. That is what it's looking like. Let's look at it here again on the 4-hour time frame. Yeah. So this may look like, oh, the first part of A and a B, and so the C does not look completed. The C does not look like, even for any correction. If you are going to correct and turn to the downside, it still looks incomplete. It looks incomplete. And if it comes up, we shouldn't break this low here. Or if you break this low, it should not hold below it. Price should turn up impulsively. That will tell us that that's a wave 3 or 5. But for now, our count is towards the downside as a wave 1, 3-1, and a 3-2 for us to turn downward with an impulse, big impulse. So we need to be cautious and be careful as we are picking our entry on both sides of this trade as so the odds favor us pushing down and the dollar losing strength. That is what we can see. That's the odd. The odd favors that. Let's look at the weekly time frame again. From the weekly time frame, you can see this engulfing candle. So, but not that engulfing with the kind of these price action here. So anything is 50-50. So if you look at 1 hour, so looking at 1 hour, what do we have? So what we have is that these are giving us the end of this correction, around this area. And this may be a 5-1. Oh, sorry, a 1. And we are doing a correction of a 2. Is not impossible. For now, to me, this looks like an A, and for here we have A. Sorry. Oh, this looks like an A here. Yes, an A here. Then we have this an ABC, or better still, this is like a correction and a 5. So it can be a 5. Then we have, or we can say all of this is an A, and this is a B, and we are going to do a C. So that is the way it is. So looking at our instrument, so this may just be a 1, 2, 3 of A, a 1, 2, 3 of B, and we want to see a C as a correction and the next wave as an impulse to the upside. So this is an extension of 100, 1, 2, 3, and 161.8. A break out of here tells us, okay, yeah, for sure, it is wave 5 to the upside. But again, if the price just come one more time to the downside, gets to this point, when we are getting to this point, we are looking for a possible sell. That is what we are trying to do. We are looking for a possible sell, a price action around this area to sell. But in case the price is not going to hold and break all these structures to the upside, then we now know we are trying to finish up a wave 5. But for me, the odds favor us having this one as a 1, and we are going as a 2 to turn to the downside as a 3. So now with that, let's now go straight to euro dollar and try to pick to make sense out of what is happening here. So let's look at what has happened on the daily. The daily price action also is like that of a DXY. You can see unlike the US dollar index. So we need to interpret all these things correctly. Now bringing out my instruments, we just broke here. But I've been on this trade, calling a couple of closure. So far, we have this as the first part of the wave as a wave 1, and wave 2, and a wave, So this is like A, and this is like a B, and we are coming down to do a C. Now, in our attempt to do a C and finish up a C around this area, we are seeing a couple of moves, of the B aspect of here the B aspect of here is just like a C of B here, okay? So, and I think if I may change something so that for us to really understand, this is like A, B, okay, to the downside, the correction. So this is like an A and ABC of a B, and we are saying an A of a C, probably a B of a C for us to have a C. And if we are going to correct all of that to the downside, what we expect for now is that we should not break here. Price should break the bottom here. And if price should go up to break here, price should not go beyond here before it turns down. So we need to see what is happening around this area. Now, with what we can make out here, if we had seen this kind of a correction, so if we are to turn down, and this is an A and this is a B, okay, and we are going to do a C, at least we expect an 100 or 123, which is 100 here, 123 here, 161.8, still further down. So what we are trying to see, we want to see is that this move came down to break this bottom, and what is going up here is a correction to this move, except it turns out to be something else. We must be prepared for anything now. So these are not times that you want to trade and you want to give it a big stop loss. You are going to lose big if you're not careful. But from the kind of loss of momentum and recovery here, it kind of looked as if dollar does not have the strength to push down again, that the most likely direction of trade now is to break to the top. But we need this week for further confirmation of what the price is going to do. So how are we going to proceed to trade this Euro USD here? So the way we are going to proceed to trade is that this for us has done like a 4 and a 5 to finish this as an A here, or the first move here as a 1. We should treat this as a 1 or the A part of it, and that we are going to do a B part of it. So in trying to do a B part of the C, like I said, maybe I should change the color for you to really understand, because when you're not seeing too many C and too many B, you may not understand what degree, okay? So this is the first degree to downside, and the second degree to downside, it's B here, which is clear to you now. A, B, C of A, B, C of B, and A, probably B, and a C of, so we are correcting this. So in our attempt to correct this, we are seeing this move as an A, and we are seeing this move to the downside as a B. The one that is going up, we are seeing this as a C. And it must count 5 ways for us. And the move here and the correction of A to B, it's at about 78 or 85. And that is what is in the vicinity of what of a zigzag to the upside, which we expect maybe at 100 or 1, 2, 3, we should get a move again to the downside. This is 161.8. We should not break this top if we are coming down. As a matter of fact, we should not break this top, because if you look at that recovery to the upside from this point down to where the price is now, all these things are analyses that are very important for us to be cautious. And this is at 76 at this point. This is at 90. So price is not expected to break this point, even this point. So price should not even violate 1.07200. So that is what we are saying. In fact, 1.07160. Price should not violate that. If we are to make any sense of, okay, we are trying to correct these last move to the downside as an A, B, C. So you have an opportunity to say, okay, you want to sell here. And when you want to sell cautiously, guiding your stop loss to the downside as price is trying to make a move to the downside. So this is the last opportunity to see, grab a sell to the downside. For me, that's what I think. That's the last opportunity for you to grab a sell. And this is at 100, this is 123, and this is 161.8. So when you grab a sell to the downside, you are looking for also a buy opportunity to buy to the upside. And we want to see what is going to give us that momentum that is going to break and shift the game here. So for now, looking at the way and manner the correction is going, it is going as if we are having an A, a B, and a C for price later to turn up and break the top. That is the kind of format I'm seeing here because it's so shallow and there's no momentum. So when you're now seeing that there's a momentum loss, it's more rather that we have an A and a B, a C correction to turn to the upside. But once the market opens, we are going to take a sell. And when you take a sell, this is the first point of call for you to say you want to exit or here. And I don't see price probably breaking here if you're going to turn to the upside. And that will be a tough call for price to say, okay, you want to break, let's see, a tough call that you want to break here, which is where the third wave is here. So it's far up here. So there's a lot of momentum, even though the price on the US dollar index is exaggerated, the way it has raised to the upside is just to complete the kind of structure it's forming on its own. So US dollar index is forming a structure on its own. So we must understand that. But in reality, looking at the DXY and what is playing out on euro dollar here, it is a setup for a shift to the upside and an A, B, and a C, and boom, to the upside. So we must take a short sell here. We can take a short sell as analyzed to the downside, and around this area, take a buy. And if price breaks out, of course, you are going to guide, you are going to look for a break of structure. Most of the time, we don't understand what a break of structure is. We must understand what a break of structure is when you are trading to see if it's complete. And you are going to be looking at the smallest time frame. Let me show us what a break of structure is. So that when we are seeing things like this, and the break of structure, of course, will occur around our little pips, like 10 pips or less, so that you don't. Okay, for instance, now see. Let me. This is 15 minutes time frame is okay. It's still okay. So now we add this move. This is the last structure here. This is the last structure here, and price came down to form this structure. Price went up, and the break of structure is around this area. Now let me pick something to tell us where that break of structure is. I'm going to use black for a teaching. So let me make it black. So price is telling us that this is the break of structure around this area. So that's the structure you want to break, because this is like, oh, momentum is lost, okay, a correction and the last move and a break here. So the break occurred here. So, and you might not be able to pick, except you just want to pick at the fringe here to sell, putting your stop loss here in case you want to lose. But, this will not give you an opportunity to enter any sell until this happened at a B. Can you see? It's happening at a B here. So it's at a B here that you have an opportunity to sell. So most of the time you say, okay, don't chase the price, because price will still come back to you. Price may have dipped down, and it will still give you an opportunity to enter at that level here. Price will still come to you. And that is an example of what we can see here. Let me take this out. Okay, let me still maintain it. And price again went on, got to this point. Of course, you must understand that you expect correction. And, expect correction, you won't, because of this move has been sharp, expect correction for a further downside. And price did this to create this structure. And this is the structure, again, that on this other area has to be broken. This is the structure. Price broke this structure. But we know that price breaking this structure is only going to give you, it's a corrective format. And you must know that the price is not going all the way to the upside, except you read. And after this break of this structure, price came down to probably give you an opportunity to enter. Price giving you an opportunity to enter, you must know that anything can happen. So if you put your stop loss here, you are caught and you are out. Price is moving. And this move also is very corrective. Now, the next structure that the price also is breaking also is this here. This is the next structure around this area. A very small structure, price is breaking into the upside, and price immediately is coming in. These are things that you don't want to trade. Really, you want to be very careful. You want to read your structure very well, because these are no bigger structure. This is going to be a substructure to this one, so you have to be very careful. So I'm just teaching us on how to probably grab any structure break, because once price comes to this area, it's going to give you probably a 5 minutes or a 1 minute structure break. And if you can just pick your low, if you're able to count your internal wave and probably get it, fine. Like here, the structure to be broken here, if price is going to come down, will be this. You see, price has been making higher lows now, higher lows and higher lows. So price is still going up. So price is not done going up. It's going to still break this top here, probably get to this point or to this point before it comes down again. And price is going to break down. And when price is going to break down, we expect price to continue to break down. If the momentum, it gains momentum and gathers momentum and it begins to go up and break this area, we are going up. Once price touch this area, we are going up. We are not coming back to do that C black. So I'm taking all the pain to explain to us that next week is going to be on both sides, price is going to move. The first is we expect price to move to this area of how many pips? Between here and here, price to gather like 23 pips for us to get a price action with that 23 pips to sell. And if we should sell, if you should grab a sell, we are selling at least from here about 50 pips or thereabout. The first one is around 70 pips to like 100 pips to this side, and we should be expecting a reaction around this area. We must be counting, because if it's coming down, we must be counting as a C wave, a 5-wave structure. We must know when it's going to give us a C and plan to enter, probably at a break of structure, you know, just like you have a break of structure here too, around this point. So we must understand what a structure break is and how to probably take a move to sell. So we are going to probably, we're not buying this, it doesn't make any sense, is to sell to get to this area and to buy from this area and move up. But if anything changes during the week, we will see if we're going to have a break to the upside or we're going to have break this structure to the downside. Then it tells us we are going to still, once we break this to the downside, we are going further down to complete that structure. But once we break this to the upside, then we are in a new big move to the upside. That's what we can get from here. Now, let me finish on gold. I haven't said this. Let me go to gold and finish on gold. Let's finish on gold. On gold, let's look at what we have on the monthly time frame. I think it should be more apparent to you because you need to understand this as well. Now, this is the monthly candle. Now, this is the monthly candle as what we had so far. These are big moves. This is a correction. This is a correction on the monthly. At times, you don't understand what kind of correction is this, what rubbish is this in the middle here. And what we have is here is also an ABC. And we must understand how ABC format is like, you know, when you are having an A usually is more or less a simple correction, but B is more or less very complex and very delicate. We must understand that. So looking at this correction here on the monthly time frame, which will give you a clearer perspective to what exactly the price is trying to do on gold. So we have an A, B, and a C. That's the first move. So A, B, C of an A. Now we add this move, the first part of a B, the B part of a B, and the C part of a B. So in the middle here, A, B, C of a B is usually the last. So the B is more complex, you know, spreading through, taking more time in its spread, okay? So you have an ABC of an A, ABC of a B, then you have a C to the downside to have completed that wave. So, and the C coming down had broken this low here. Now, when you are correcting also, you must be looking at price as a way of trying to give you a pointer to what I'm not going to break. See, this is what I'm not going to break if I'm coming down. And the pointer is around this area. Price is not going to break this area. And price came here, broke all this structure to the downside, grab liquidity and go up. Price will always grab liquidity above or below before they make their move and try to confuse you. Now, this is the recent move. This is also a correction. Now, this correction I just explained has happened in 2020. Now, up to this point, which is 2022, last year. Now, this recent move that looks like an ABC here, we have it also here on the weekly. So let's look at it. So let's come to the weekly and try to make sense out of here. Now, this is the first part that I talked about as an A, B, and a C, okay? And this is A, B, and a C of B, and this is a C. This is the weekly time frame. Now, we now have this structure here, also like an A, B, C here. So gold has been moving in an ABC fashion. So it has, but when you begin to look at the lower time frame wave, you might be seeing 5 waves, you might be seeing complex waves and all of that. So it has been an ABC format, and after this ABC, then we have this correction also in the middle here. The correction that we are having here looks like this kind of a correction here that we saw on the monthly time frame here, which is an A, ABC, and a C. So now let's not try and see this out. When this forms, of course, where price is not going to break will still be this one, which is the B. B is usually where if they break it slightly, price will not hold before they move up. So okay, but here they didn't break here. They came very close to this B before they moved the price to the upside. So on the weekly time frame, we have, after completing this move, of course, this is still lower high, higher low here. So at this point, there's a break of structure here. So price is telling us I'm correcting deep. And we had a good break here. So price went down deep. So we have this as here as an A here. We can say this A is 1, 2, or let's say A, B, C of A. We have A of B, B of B, and a C of B. And after the C of B, and this one forms like a running flat here, and A, B, C of B, then the C, which is the last leg. So we add that, then we now have this trust to the upside. Now, everything is breaking itself down in a smaller broccoli. That is what we are trying to see here now. Let me show you. When we add this correction here on the monthly time frame, so when you now spread it out on the weekly, it looks big, right? Now, when this, it's the way it appears on the monthly is similar to what is appearing here now for this one. Now, we are about seeing exactly this here on the daily. This is on the weekly. We are about seeing it here on the daily. So if you go on the daily to look at it, the daily time frame to look at it. So we are about seeing it on probably on the daily time frame. And this one is probably still going to give us like an ABC. Probably we are going to have a B and probably another C before we go up. So it's going to be more complex, you know. I don't see that it's going to be probably just a single and we're going to go and break the top. No, this has corrected, it has broken the structure of 4 here, the 4th wave here. Unfortunately, you know, while we are trying to look, they just made a 4 and a 5 and they ended it here on the daily wave 3, wave 4, wave 5, they ended it here while we're still guessing. And of course, they could have done some other things and still break up, but of course, what has confirmed that we are going down to do a 2 is a break of this 4 here now. Now, what and where are we not expected to break? The pointer now will be around this area. We don't expect the price is going to probably pull beyond 1908, or better still, let's look at the kind of correction, the low of the correction when we had this corrective format here. And so this will be an area that we should not expect price to break. This is the low here, which is between 1884 and 1908. So price should not break between that point. How many pips do we have there now? Price should not break here. I don't expect it to break 1908. That's about 24 pips. 24 pips. I don't expect. So price is going to push up to correct, come down one more time to finish. We might be seeing probably just like B is always B is always on any time frame. So we might be seeing a very funny B taking more of our time, spreading out and giving you an headache before we have a C to the downside. But anything it presents, we must be prepared for it. That is what I'm trying to say now. Now, are we done? Are we going up? Now that we know the areas, let's look at the 4-hour time frame. Or we should push to the 1-hour time frame immediately. Now, at the 4-hour time frame, we had seen these as a possible fourth wave, and the 5th wave. Price had gone so low. At this point, we had seen this as 1 and a 2 and a 3, probably and a 4. Because it's corrective, we may just continue to move up to correct B from here, or we may still go up one more time, break the bottom before we go up. But we are at the last moment of this particular wave. We may just be pushing up from here immediately, or still come down to break the top before go up. You must be prepared for anything. So a pullback here is for you to grab your own buy if you are not in. Let's look at the 1-hour time frame. I'm going to break that down for us and what to expect to tell us that, okay, now this will be enough. Now, this reaction is good for us. Seeing this reaction is good for us to tell us that, yes, price is now trying to make, on the 4-hour time frame, you saw the kind of price action it gave us. So we are trying to push up. That is what he's trying to say. On the 5 minutes time frame, we are looking at this last part of the correction now. So that's the 5 minutes time frame. Let it load. So let it load. So we are talking of this wave now. So this wave, this is the 4th wave, and this is seen as the 5th wave to finish up this entire run. So this is like a 1 and a 2 here, and this is like this may be a 3, a 4, or this may just be a 3 and a 4. Okay. Or this may just be a 3, a 4, sorry, a 3, a 4, and a 5. It could be anything. So but we are going to be looking at whatever is happening here. If this is going to correct to the upside as a 4 to come down or not, I want you to give me you have to watch everything right now. You have to, let me bring out my drawing for us to know how to, deal with this. Now, in trying to deal with this, if this is the last and it's a 4 and we're not coming down again, so we have to look at this as a 2, okay? So looking at that as a 2, we start from there and we come down to the last part here. So if you come down here, this will be the 4th. This will be the structure to break now. So this will be the structure to break. So it means that once we are able to break beyond 1943, or let's say 1944 or 45 to the upside, then it means that this wave is the wave to continue to go up to correct B. And we're going to be having some funny structures in the middle before we turn down again, if you're going to turn down again. But how may I quickly apply myself that this is not 4? How can I do that? So I may apply myself that what is cooking here is not the 4th wave, but it's the beginning of the correction of what we are expecting. So how may I apply myself? Let me go inside of a 1 minute time frame for us to understand that. Let's look at the 1 minute time frame to understand all of that. So the 1 minute time frame, we are seeing this move, a push. Of course, we'll continue to take the beginning of every wave as an ABC until something change. Any format with any time frame, always take your move as an ABC that your C will terminate at either 100, 123, or not more than 161.8. So once you break 161.8, just know that it is not ABC, but it's a motive wave that is, developing. So for here now, we add this move. This would have been our first wave, and we have an ABC of this move to the downside. See, an A 1, 2, 3, and a 1, 2, 3, and the 5th wave, which looks like a wave 2. And of course, in terms of retracement, yeah, it forms like that. But where is 100? Extension of 100 is here. Extension of 1, 2, 3 is here. Extension of 161.8 is here. So any moment I break this, just like we've had a broccoli completed here, or if 1, 2, 3, 4, 5 to the upside here, an ABC is an A, B, and a C to correct that move. We are going to continue to warm up, do a 161.8, finish this also as a 1, 2, 3, 4, 5 on probably in a 5 minutes time frame. This is a 1 minute or less than 1 minute time frame here. So probably on a 5 minutes time frame, if this also will now push to be an ABC or a 1, 2, 3, 4, 5, it is going to break above here. And if it breaks above here, we must be getting a reaction around this area. So if we should break around above this area, get reaction here, don't think it's 4. It's a new wave that is going to come down and break the top. Because as far as we are concerned in terms of an ABC correction, it should not exceed here. And these are things that we should know that will guide us. So once we get here and a reaction, you check for your, and a break, you check for your ABC that will go deep to pick your order to buy. Now, so far, the primary 2 here is at this red. So if this is going up, we don't expect price to come down, break this area or break this area. Price may even still come and break this area, but not this area. But see, we are almost at 100 and 123 in a matter of how many pips? About 32 pips. We won't know what is going to happen here if we are now going up and that price is not coming back to break the bottom. If price should turn down in any of this area, it will be an A, B, and a C, and price is still coming down to make the 5th wave before going up. So you must be ready for both. And with that, I've come to the end of today's training. Watch this video over and over. Subscribe to this channel by clicking subscribe button at the end of this video. Thank you.